Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks at weekly setups across the U.S. market. Using the tools available on StockCharts, we'll look for long time frame trades. And don't forget to subscribe to my articles and Twitter feeds. So, a big move in the materials stocks yesterday, and that's what I want to spend some time on today. Glitter and plumbing, we call it. Anyway, with the gold and copper stocks breaking out, I think it's pretty important for us to at least take a look at them. And I want to talk about the difference in P and F chart settings, and I'll explain why as we get into it. But one of the things that happens on a P and F chart is you can do traditional 3-box reversals, or you can do percentage reversals. And we're going to spend a little time focused on why that matters and how it'll totally change the chart shape on you when that happens. So first things first, just checking out a market summary, going through, looking at this. The market's basically holding in there just flat. Dow's up 0.1%, and the TSX in Canada is up on almost 0.5%. And the reason for that is mostly material stocks. So rolling through the US indexes, the industry indexes, what you'll see is gold today is putting in another banner day, up 1.42%. And then if we look at the copper index, and I think that's farther down in this other group, under commodities, here's copper. And you can see that's a bit of a move, trying to fly higher. And with that kind of a breakout, that makes makes the chart really improve. So that's what we're talking about today, and that's why, because that's probably the most exciting stuff happening in the market. I will say one of the things that disappointed me so far is that the Japanese yen has not confirmed gold's move, so that's bothering me a little bit. So we're going to keep that in the backdrop as we watch here. But the big thing to be aware of when commodities start to move is they're all moving as a group. And so right now it's time to be bullish. So if we go into a P&F chart, and I just want to show you, first of all, what a P&F chart is and then how to read it. And in this case, I've got the scale set up as percentage, and the reversal is 3 boxes. So every one of these grid lines is 1%, and as the price moves up, the stock is in a bull market or a bear market. And a bull market is defined by a blue line, and a bear market is defined by a red line. And the way those change is when the price action takes the price above the red line, then it'll form a blue line off the last low and start to head higher. So there's two things to describe. So one is a bull market, which is above the blue line. One is a bear market, which is below the red line. And the next part of it is what's a buy signal and what's a sell signal. So when we talk about a buy signal, what we want to talk about is, in this particular case here, we have two X's sitting sideways, and we've taken out this X here. So we're on a buy signal at this point. When you go from a down market, so in this case we were making lower lows, so after making a higher high here, we went down here and made a lower low. This would put this on a sell signal. So we come up and we make a column of X's. We are not on a buy signal yet. We pull back down. We're still on a sell signal because we haven't made a higher high. And now in this case right here on this X, we've made a higher high than the previous column, so we go on a buy signal. And then we ran up here, and we made, so we're still holding that high, so we're on a buy signal. We don't make a lower low, so we're still on a buy signal. And then we come up here, and all the way up until we get to here is our first P&F sell signal on this chart. So again, buy signal and sell signal, and bullish and bearish. And a bull market is when you're above the blue line, and a bear market is when you're below the red line. Now, if we change these chart settings to traditional, this chart changes a lot. And the reason I want to show you this is because it really depends on the chart settings as to what you'll get for a bull market or a buy signal or a sell signal. So in this particular case, when we went above 2017's December high, I guess it would have been the January high, when we went above that January high. And the reason we know it's January is because the month is 1. and then 2, 3, 4, 5, 6. There was no price action that moved the chart in July, so then we got 8. No price action that moved the chart in September, and then October is A, November would be B, and then C. We did not get a breakout in this chart. So in December, we started to move above the previous X, going back to January of 2018, and we finally made a move. Now, that previous chart I just showed you, obviously the price looks like it's been moving a lot more. And the reason is here is we're doing a traditional scale, and on a traditional scale, what happens is if the price is below a certain level, it's going to do 50-cent increments. And then as the price moves above a certain level, it's going to change to dollar increments. So here on this chart, you'll see we're moving up by 50-cent increments. And then as we get to $20, we switch to dollar increments. And then we go all the way to $100. And at $100, then we'd switch to a $5 increment. So the idea behind the chart, again, is keeping track of buy signals, so going above the X. So in this case, even here, when we had this X and we went above it here, we're on a buy signal, but we're still in a bear market. So hopefully that makes sense. And then here, the moment that this one box got put in and then this X got put in and we started to climb higher in January this year, the computer draws this blue line. So let's just say that the market pulled back a bit and then went higher. This blue line would just continue to extend like it did over here. And then the red line didn't get inserted on this particular location until we actually broke through the bottom of this blue line. So it didn't get located here or placed when it was here because it was still in line. And it was actually when we started to break down below in here and go further down, that's when it would have registered as a bear market. So important distinction on the chart setting. And one of the reasons that I wanted to describe that today is if we go and we get the bullish percent index, and by the way, I updated all of my charts in my chart list today for you this morning. So I'll just go show you how to get there. So under blog articles, the Canadian Technician, right up here at the top, it says Greg's live chart list, and you can go in and find that. And this bullish percent gold miners chart is the one I want to specifically talk about, but we're going to go right into the chart directly here. What you see is I've placed the price of GLD, I've placed the bullish percent index for the gold miners index, the GDX, and GDX:GLD. And with that chart, basically when everything's above the 50-day moving average, it's a good time to be bullish, and you want to try and stay there. But I had trouble believing that we could only be at 40% of the gold stocks bullish with the move in gold here, where we continue to make higher highs. On GDX, we're making new 52-week highs, and yet only 40% of the stocks are bullish. And the reason that happens is on the point and figure chart, when we go through this list, what we'll see in the traditional 3-box reversal is that some of these stocks are still, they've made a lower low and not a higher high. And so when we have that situation, and I'm now hunting for one, what we get on here is, here's an example. So this stock is making a lower low, even though it's in gold. And what we see is when this happens, all of a sudden, we're not getting the, oh, this is on percentage, that's why. Let me go change that. And then I'm going to change all of the charts to that. So update and apply style to all. And there we go. Okay. So in this particular case, you can see that the price hasn't moved much based on traditional scaling. And so the P&F chart doesn't show us too much information. Now, if we continue to work through, you'll see that this DRD gold is breaking down and is still way in the lower area. And if I changed it back to percentage scaling, the chart looks a lot better. So I want to encourage you to at least be aware of the difference in the settings in the charts. And the reason is, in this case, again, the scale goes up by 1%, the box size, and you can change that, right? You can go down here and change it from 1% to whatever, 2%, or whatever you want to make the scaling of the chart. But my big perspective would be, just when you go look at a bullish percent index chart, especially on small price movements, if it's looking for a 50% or 50-cent move on a stock, and you're using a traditional box, in this case, it's looking for a 25-cent move, it hasn't moved enough to start giving you a bull market signal yet. And it won't until it gets way above this X up here at $4. So the stock would have to double in order to change this chart to a buy signal. It could make a small road up, then make a pullback, and then start to turn up again. But even in that case, you need to get all the way up to $2.75, and the stock's currently at $2.35. So it'd be a 20% move just to get it on a buy signal. Okay, so hopefully you understand what the difference is and why the difference is important. So as we work through these charts, again, I've changed them all to traditional scaling, so you can see the name here, traditional scaling. And this is making higher lows, and after this X was here, it's making a higher high. But you can see this price difference here is significant. The chart doesn't look very strong. Now, if we go down here and just click on a regular sharp chart, you can see the stock is trying to break out of this huge base. And if this did, obviously that for technicians, right, that's very bullish, because what we think is, at that point, somebody is willing to pay more for this stock than they have in the past year. And so the moment that would happen, all of a sudden this stock would be making new 52-week highs, and that would attract attention as to the price action is changing. So rather than being stuck in this base, we would start to break out to a new high. And again, anytime you want to change back and forth from the chart settings or whatever you see, you can go down here and apply the style to all. And it's, it's not a big risk or anything, but you just go in and click on that. And now if we go and look at them in a summary mode or 10 per page, what we'll see is we can just scan through them, the chart in an orderly fashion. And if we go back to this other view and change it to a P&F chart, and in this case, I'm going to change it all to percentage scaling and update it. And I wouldn't mind it if it displayed a little bit bigger. I'm not sure that I get the choice to change how big it is. Maybe I can here. Let's just see if that helps a little bit. And then I want to apply that to all. And when I hit this apply style to all, it'll only change everything in this chart list. Okay, so I have a whole bunch of chart lists. It's not going to change my whole world. It's only going to change the ones in this gold miners chart list. So I can apply the style to all. And now when I go looking here, view all, in summary mode, they're all going to be in P&F charts. And again, now that we've changed the scale, some of these charts are going to be quite extended. But what we want to look for here, again, is when a stock starts to make higher highs, this is considered bullish. And just because it's making a column of O's doesn't put it on a sell signal. It won't make a sell signal until it makes a lower low. So in this case, it would have to drop down here and continue to drop in order for the price to reverse. So the difference between something that is moving above its 20-day moving average or 50-day moving average or 200-day moving average is it's a single line in the sand, and literally it could be above one day and below the next day. On a P&F chart, you don't get that buy signal, sell signal reversal until, so again, making a higher high here, so we're on a buy signal, and down here, if it made this lower low, if it went below this O, then we'd be on a sell signal. And if it got below this blue line, then we would change it into a bear market mode. So the price has to move quite considerably. So we're up here at, let's say, 43.85, and we have to get down here below this lower O. So we'd have to get into $40.99 or less. Like $41 won't do it. Has to be at $40.99 in order to put an O in this box. So we have almost a 10% range between a buy signal and a sell signal. Whereas if you used a moving average, it would be a line in the sand and you're either above the 200-day or below the 200-day, and 1 cent would make the difference. So as we work through the charts, the idea being you want to try and find these bullish breakouts, and obviously a lot of these charts on a percentage scale are really starting to move nicely, and this is what uptrends look like. Here's a Senko gold stock, and it's trading whatever 77 cents. It's not so much the price. It's what we want to look at is as it continues to break out, this is pretty important. Now, again, gold stocks are a volatile beast, and you can see that these are moving, 68 cents to 80 cents. So this is a, from 65, let's just call it down here at the lows, up to 80 cents. You're moving 20% of the stock price. So that's pretty significant, almost 30% or 25%. So here's Alio Gold, and what you see is this is taking off to the upside. It has a nice move from 80 up to $1. And when you look at these P&F charts, they look pretty good. Now let's just go look at that same stock, Alio Gold, on a regular day chart. And, so P&F chart totally changes your perspective on what we're looking at. We're sitting here just below the 200-day moving average. And if the stock was to start to break to the upside and break out of this base, that would be bullish. Okay, now one of the stocks that's really starting to move lately is Freeport-McMoRan, and it had started to make higher lows in momentum. And last month, it had actually pushed above the zero level on the PPO and put in a higher low or a higher high than we had seen going back a whole year. So that would be what we would consider a trend change. Anyway, it came down, stayed positive, and is now starting to push up. So we like this on a daily chart. But this shows about a weekly chart, not about a daily chart. And what we see here is all of the conditions that are good for a stock just starting to break out. So here's Freeport-McMoRan breaking out of this 6-month base. All of the conditions I like to see. So I see a downtrend in momentum here, and it's starting to break out to the upside. So we're just going to use a blue line or something that we can see easily. And we see the same thing in price, right? We've got this downtrend here. Or conversely, we could just take this little base, this 6-month base that doesn't look very big on a 5-year chart, but it's this sort of breakout, and it's just getting started. Now it's up against its 40-week moving average, but I think when the whole group is starting to move, that's bullish. And I mentioned that both copper and gold are moving, and Freeport has both of those. When we see the full stochastic moving above 50 on a weekly chart, and you can just scan for that, so you go into your group and say, if full stochastics with the settings are moving above 50%, let me know. Or you could scan for anything that's crossing above its signal line above 50 or above 20. Those are usually good places to look. And then as the stock starts to break out to the upside, again, just because the full stochastic gets to 80 doesn't mean it's overbought. It can run for another month or 2 or 3 or 6 months. Like in this case, it ran for 3 or 4 months and continued to stay above 80. So the stock was very, very strong and went from $3.47 to $13. Now, I think we can get by on that kind of a return. And so in this particular case, we're looking for $10. We're up at $13.50. We've moved 30% off the lows. It feels like a long way, but as you can see, these commodity stocks can really, really move. And this one is just starting to get going. We can also see that this base, when you're starting to break these downtrend lines, these can be helpful for trading, and they don't tell you how long, but they do tell you momentum is starting to improve. And when momentum actually goes above zero, that's when the stock can really soar. So at this point, we have all of the conditions on Freeport-McMoRan that we'd like to see, and we haven't got a breakout in relative strength yet, which we'd like to see, where the stock starts to outperform the S&P 500. It hasn't really done that. And over here, you can see the scooter ranking, which is like a sports ranking system for stocks. in terms of who's won more games lately and who's outperforming. And what we can do is when it goes above 50, well, I like it when it comes out of this base at 10, kicks up and says, hello, something interesting going on here, and then starts to accelerate. And literally we're in the first part of this move, and yesterday was a big day for Freeport. So if you can get any sort of a little pullback to work with and set your risk level, then this stock can be nice. But you can see over here, not that way, let's do it this way. Over here, when the stock started to take off, we see this quite a bit with the scooter ranking, where it'll kick up, pull back, and on that pullback, it's usually a nice place to get involved when it starts to re-accelerate. And then conversely, when it came out of this zone over here, it dropped down, rallied back up, and when it immediately failed, that was a great place to be cautionary. And sure enough, it's been declining for almost a year. So I like everything I see on this Freeport chart. There's nothing to hate about it, but the reason that we want to see this type of price action, especially across the group, is usually the industry is responsible for the biggest part of your move. So when a whole industry is attracting attention, then institutional investors will start to take a position, let's say, in the word gold, or in metals or materials or mining stocks, or depending on how you want to define it. And as they start to run, these stocks start to pick up speed. And of course, as they start to improve in momentum, that attracts more investment. And so that's how the trend gets started, from something that's been going sideways for years to all of a sudden getting kicked up. Okay, so so for this technical scan, what you can do is you can just go in and pick the material sector. And I suggested one other thing. I made the close greater than $1. And just check your syntax on that. And what we see here is it says everything is okay to run. So we run the scan. And when we run the scan, it should give me scan results. Whoops. Can't really get there. So when we get to this scan result, what I want to show you is this. Look at the scooter rankings on these stocks, and they're really doing very, very well. And I can run this sort so that I sort it based on scooter ranking, then industry group. And by doing that, we can quickly scroll down and just see, here's gold mining. And we can look at these gold miners. And, out of the whole group, the scooter is very strong. And these other ones, these are listed in Canada. It doesn't make them a bad stock. It just means that they don't have a scooter ranking. And if you go look, I need to drop them into a chart list. So I'm going to replace an existing chart list. I'm just going to use one for, yeah, thank you. Use one from a scanning one and just dump them in here and preserve this sort order. And by doing that, now I can go down and I can highlight over these ticker symbols, and it'll actually bring the chart up. So let's go down to the gold miners. And again, these are all of the gold miners in the US, and that chart is absolutely on fire. And if it feels early, we're just hitting 6-month highs. This Barrick Gold chart, one of the biggest gold miners, just starting to break out to new 52-week highs again. B2 Gold. And hopefully I'm giving you a feel for it. Like, this is a really nice area. All of these charts, like, that's just breaking out this week. It's a silver chart. It's at $6. It could easily be 12. Franco-Nevada, Royal Gold. Okay, so the point I'm trying to make is that it's very easy to go and work through these charts. And let's go down to the ones without the scooter ranking. Sometimes they're just foreign listed, and so they're either small market cap or foreign listed. And if you look at some of these, that's a nice base on IM Gold if that was going to start to break out. Here's Kirkland Lake. This thing has just been a train engine since December, from $20 to $32. Here's McEwen Mining, just breaking out. I love that name a lot. Usually it moves really well with the gold stocks. It's one of the poorer performers on this launch. Osisko Gold is starting to run. And again, you'll find these ticker symbols on the Canadian market as well. . And here's Silver Standard Resources. again, these are fabulous charts that are already moving, and I know some people will feel like it's already gone too far. Well, we're just moving into, let's go pick these copper stocks here, and what you see is here's Hudbay Minerals just starting to get going, Fortuna Silver, Endeavour Silver, Ferroglobe, and I think you get the idea that these stocks are just shaping up for a nice run, and we can start to look at them. We can define our risk quite easily. You still can't trade them risk-free, without stops. You need to make sure that if the market does reverse on us, we're prepared for that. But, when we go look at this, just to pick one stock, this thing is sitting here. This is a 1.5-year chart, and it's just trying to break out. And if we go to a 5-year picture, if this is going to start to break out of a 2-year base, that's a pretty nice place to get on board. PPO is just moving above zero. Full stochastic is starting to accelerate. Scooter ranking says it's one of the best performing stocks. So we have lots of reasons to like these names. And my big perspective on it is don't try and get too focused on the fact that they've been running for a little bit. I think a lot of these are just starting to break out of bases. And if we go through the whole material sector, steel as well, look at some of these changes already. These stocks are starting to try and run, and here's Cliffs Natural Resources and Allegheny Technology. So all of these are trying to break through to new 52-week highs. And if they were to start to do that, I think you want to get on board that party. So here's Nucor just as an example. Relatively close to a new 52-week high. And if we go to the 5-year picture, this chart's been consolidating for a couple of years, and we've just broken this downtrend on PPO and starting to move higher. For me, this is just a really nice entry here, and I would set my stop at this week's low, and if it went any lower than that, I'd just get out, because it should start to run now based on the way the rest of the industry group is working. One more. So, okay. So with this, the big issue for me is as these stocks start to rally, don't be afraid of the fact that they've run already. They're so beaten up. These ones have lots of room. And again, this is ArcelorMittal, one of the bigger steel companies around. Its chart is still weak, but it's just starting to improve, much like the Freeport-McMoRan chart. And as this starts to set up to the upside, I think you want to take a look at them. So again, how did we get there? We went into technical scanning, and we just said the group is the materials sector. And the way you do that is you go down here to the US, and you'd scroll down to materials, and just pick the whole group and add that. And then that'll give you a list. And again, I kicked out any stock that was under $1. You may like to try and trade those, but for me, I would prefer to just drop off the ones under $1. Okay, hopefully there's some ideas for you there, but this gold breakout seems to be real. My one concern is that Japan, the Japanese yen hasn't confirmed it, but all of the other things are starting to take place. So thanks for taking the time to join me on Market Buzz. Market Buzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern, 7:30 a.m. Pacific time on StockCharts TV. You can also catch replays on the StockCharts YouTube channel by Googling Market Buzz, or on StockCharts TV, which has a running list of technical charting informational shows. Thank you.